Good morning. The markets are moving and so are you from the BizNews studios. This is BizNews Daybreak for Wednesday, the 28th of January, 2026. I'm Alec Hogg. Here's the context you need to win the day. Well, the rand is now settled comfortably below the 16 mark. Starts the day at 15.88 rand against the US dollar. It was helped by another bump in the gold price, which jumped 3% overnight to a fresh peak of $5,232 an ounce. On Wall Street, Nasdaq picked up 1%, while the S&P 500 was also in the green, ending 0.5% higher. Tesla fell 1% ahead of reporting its financial results later today. That's the quarterlies to the end of December. And other BizNews portfolio favorites like Sabvest, Process, First Rand, Lewis had good sessions here on the Johannesburg Stock Exchange. But the JSE itself, though, was about 1% down, with resources falling sharply, down 4%. But you'd anticipate that could turn around quite significantly today after that $200 jump in the gold price. Also coming out later this evening from the international front, we will hear from ASML. That's the Dutch headquartered semiconductor machine monopolist. Essentially what they do is they make the machines that make the semiconductors, those computer chips. So they're bringing out their quarterlies today, and there's lots of excitement there. ASML's share price was up 3% last night in anticipation of that, and it's had an incredible run. We own the stock in our portfolio, thanks to David Shapiro, and we've seen a 36% jump in the ASML share price in the last month. So it really has been on a tear. Well, let's focus more, though, on those foreign exchange ructions, starting with the overnight news from our partners at Bloomberg.
There were massive moves in the currency market today. The dollar sold off, suffering its largest one-day drop since April. President Trump said he did not think the value of the dollar had declined too much. We had the Bloomberg Dollar Spot Index dropping by more than 1%. We move to company news next. After the bell, Texas Instruments gave a strong revenue forecast for the current period. This indicates demand for industrial equipment and vehicles is beginning to rebound. We got reaction from Jay Goldberg, senior analyst at Seaport Research Partners.
So Texan is a company that runs its stock deliberately boring. Like, they want to be as boring as possible. So a little bit of a beat here is actually pretty significant. I don't want to overdo it, but it's good news, right? For Texan, $100 million over expectations is a good number. EPS also looks a little bit higher than consensus too.
Jay Goldberg, their senior analyst at Seaport Research Partners. Shares in Texas Instruments up by more than 8% in late U.S. trading. Wall Street is bracing for a slew of big tech earnings over the next couple of days. Tomorrow, we'll hear from Tesla, Microsoft, and Meta Platforms. Then on Thursday, Apple will report. Paisley Nardini is portfolio manager at Simplify Asset Management.
The earnings that we're about to find out over the next 48 hours could be quite strong to the upside. We could continue this trajectory of higher for longer as it relates to the technology sector. But what if that doesn't play out? And I think there's a lot of catalysts as to why a lot of this CapEx expenditure, is this going to deliver at the bottom line for these tech companies?
Paisley Nardini there of Simplify Asset Management.
With more context on why the US dollar is under so much pressure at the moment, here's Bloomberg's foreign exchange specialist, Carter Johnson.
I think what's really interesting is we can look at this on a pretty long timeline. So I'm starting to hear comparisons late last week, today, yesterday, to this feels like early 2025 and Liberation Day all over again. And that's just because we're seeing some action in stocks and treasuries, but really this is a real sort of dollar-focused impulse to sell. And of course, on a shorter timeline as well, we can think about that in the context of what we saw last week, which was some pretty concerted movement in dollar yen specifically. And that was likely because some folks here in the US, the New York Fed acting at the behest of the Treasury, were reported to us to be checking rates and sort of calling into some banks and seeing where exchange rates were trading. So on a couple different levels, sort of in the near term and in the big picture, questions about the US fiscal position, policy uncertainty, those are all combining right now.
Carter, reading in this morning, Bloomberg reporting out the positioning is heavily one-sided. They said since Thursday, roughly 2/3 of options trades in the euro and the Australian dollar have been bets on further greenback weakness. So is this largely about dollar decline and not about bets on other currency strength backed by fundamentals?
I think the answer, honestly, is both. And a lot of that impulse, as we just talked about, is because of a declining dollar and questions about U.S. policy. But we are seeing relatively solid growth expectations in the rest of the world, whether that's Europe, maybe that's in Asia. And that really underpins the impulse to sell dollars as well. If growth in the rest of the world was cratering at the moment, we wouldn't be seeing this sort of action we're seeing in terms of dollar sales. So it's absolutely the other side of the coin as well.
What is the relationship between weakness in the dollar and what happens in the equity market? I mean, you made the comparison minutes ago to kind of feels like April 2025, and we all remember what happened to the equity markets during that time.
Absolutely. And I think that's the big question is, will we see that again, where typically you'd expect to see the dollar weaker as stocks strengthen. They have a negative correlation, particularly the dollar as a traditionally haven asset. We didn't see that late last year. The stocks, the dollar, treasuries, they were all falling together. So I think that's the big question right now is, will we see that again? I don't think we are yet. A different picture as well, a weaker dollar should theoretically support domestic manufacturers. It should support exporters here in the US. That's typically what we'd see on a lag. But we also know that that's something the Trump administration has been vocal about as well, a weaker dollar. But theoretically supports domestic manufacturing and exporters who are looking to sell to the rest of the world.
But is it about global investors and another sign perhaps that global investors are less interested in dollar-denominated investments?
It is possible, although I think it's too early for us to say at this point, as we knew last year. We don't have that data yet necessarily. And again, if we look at just the relative performance of U.S. stocks, they're doing all right. They're certainly holding up. I think what it could definitely be indicative of, and this is something we've covered a bit here at Bloomberg in the past, is hedging behavior. And what that means is you're a global investor invested here in the U.S. You might still want your exposure to U.S. stocks and U.S. tech, but you're going to hedge that dollar component of that much more than maybe you used to.
So with the markets, before we move on to the local story of the moment with foot and mouth disease, Texas Instruments and General Motors had big moves up on Wall Street last night, but the prices of healthcare businesses are crashing. Now, whether or not this contains concerns for Discovery here in South Africa is anybody's guess. Discovery, of course, is a global business, but I guess we need to pay very careful attention because what's happening to the healthcare stocks in the United States is very ugly.
Texas Instruments shares are really ripping in the post-market. Last I checked, they were up over 7%. They're probably still moving, but that comes as its first quarter sales outlook beat, even as fourth quarter profits kind of came more in line. And so people are really excited about this guidance.
We're getting a lot of companies reporting. General Motors learning more about the most recent quarter and the outlook for the year.
General Motors reported this morning. Shares gained almost 9% today, closed at a record high. Its full year adjusted EBIT guidance came in above the midline came in above estimates. And this really comes as people weren't sure whether companies like General Motors would be able to navigate all of the headwinds in the auto environment. You know, they're ending their EV business that comes with a lot of cost. And also there's concerns about customer welfare. There's concerns about how these auto companies are going to deal with tariffs. And even then, GM's print came in quite strong.
Are they ending? No, they're not ending it completely, are they?
They're cutting back severely.
Yeah, and I know Mary Barr was talking about kind of reevaluating it, and
it's such a difference than a few years ago when Ford and GM were all in on EVs.
Yeah, exactly. But I don't think, I think you look at the world, right, and everybody looks about it. That it's kind of moving in that direction.
There's a story in the terminal today about how European car sales are really dominated by EVs.
Yeah.
But the picture in America is quite different, and part of that is politics, and part of that's just a cultural difference.
Healthcare companies.
And
Speaking
of big movers of the day, UNH dropped almost 20% today. Humana down 21%. Humana had its worst day since 2009. The U.S. did threaten to hold payments to private health insurers flat involved in Medicare, and that really created this crater amongst the industry. And also UNH said that it would see its first year-over-year decline in revenue in over 30 years. And so there's not a lot of bright spots today for health insurers.
Cody from Paul has sold multiple vehicles to WeBuyCars. Suspicious? I think so.
Is that a crime?
No. Where are you getting the cars?
I buy them and I sell them at the spot like a normal person.
Okay.
No, man, I'm just an accounting student. I know a good deal when I see one.
That's Excel. Meant. What's more stressful, tax season or selling a car at WeBuyCars?
Tax season, obviously.
WeBuyCars, the easiest way to sell your car by far.
We've been covering the foot and mouth disease in some detail, talking to farmers, and, well, we had the discussion yesterday with Piet Leroux, and he goes into a lot of depth. On the other side, though, you have the DA leader and Agriculture Minister John Steenhuisen, who appears to be quite confident that he's on the right track. In this clip, which is taken from the DA's own internal podcasting operation, they talk to their members from time to time and do a pretty good job of it, I think. He speaks about South Africa's battle against foot and mouth disease and details how a first-of-its-kind partnership between government and the private sector is driving a massive new strategy, creating what he calls a river of vaccines rather than a lake to inoculate the country's entire herd of 14 million cattle and restore foot and mouth disease-free status to the majority of the country. Here's John Steenhuisen.
When I came into office as minister, I realized there was a problem with foot and mouth disease, and it was largely linked to poor biosecurity and a moribund scientific capacity with the collapse of Onderstepoort and the constraints that we had at the ARC, etc., Agriculture Research Council. So we started setting out to fix those things. We then called for a indaba. And for the first time ever on FMD, government, academia, the science community, farming organizations and industry bodies came in under one roof and said, guys, ladies, we've got to deal with FMD.
So this is, sorry, John, the first time in democratic South Africa that someone's been able to bring all of these role players together to deal with the challenge.
So we had that FMD indaba then selected a ministerial task team. Half the task team is made up of the private sector, private vets, industry representatives, half of government. The first time ever there's been a public-private partnership at a ministerial task team level on FMD. They were tasked then to come up with strategies for us to beat FMD, not just to deal with sporadic outbreaks, but to deal with FMD. That ministerial task team came back with their report, and out of the options they presented, we chose to go with the vaccination route, in which we intend to vaccinate the entire national herd. And this isn't a thumbsuck. This is something that's designed by scientists, designed by with partnership with the private sector, and the strategy is the right one. It's the same strategy that Brazil and Argentina used, similar peer countries to us, to become FMD-free by vaccinating the entire national herd. Now, Brazil took 21 years to get to FMD-free status. I think we can get to the same status within 8 to 10 years. But what frustrates me is that I hear now that there's this criticism, you've got a 10-year plan, as if we're not taking care of what's happening now. Of course, the 10-year plan is to get to a certain point. And as I said, in leadership, you've got to understand where you want to go in order to set the steps in place to get there. But of course, it has an immediate part of the plan, and it's set out very clearly in the press briefing I gave last week. We have a 12-month plan now to get to a 80% vaccination of the entire national herd within a year, to be able to reduce the incidence of FMD by 70% in 12 months through the procurement of vaccines and the rollout. We, to date, as we sit here today, have vaccinated over 2 million animals around the country. That is a significant, it's the largest scale vaccination for FMD that's ever taken place. And we've got vaccines now coming this month, and a whole lake of them coming in February through what I've done in opening up the FMD vaccine market. In the past, we've only relied on Botswana for their vaccine. Through the reference laboratory at the ARC, we've been able to match our strains with vaccines. For instance, the Junevax vaccine called Dolvet from Turkey, the Biogenesis Bago vaccine now from Argentina, and we've been able to, through our reference laboratory, match those to the strains we're having. I've done emergency imports of those vaccines, and we're finalising the import permits of those on an emergency basis because we're facing a crisis. And the idea is then to have a river of vaccines flowing in from different sources, so you're not reliant on a single supplier, to create a lake of vaccines that is then able for us to vaccinate every one of the 14 million cattle that we have in the country.
It's worth pointing out again that Steenhuisen estimates it's going to take South Africa between 8 and 10 years to be foot and mouth disease free through this mass inoculation or vaccination. It took Brazil 21 years to achieve that. The question that farmers would have, no doubt, is, but hang on, how come we managed to stay FMD free for a huge part of the country for decades? And now the old system of having buffer zones around the areas where the FMD carriers are, that's in the national parks, buffaloes are endemic carriers of foot and mouth disease, as we heard from Theodore Jager from SAI some time back. That has been abandoned, and now we're looking at a different option, which is vaccination. The farmers are skeptical. They say that the vaccines are ripe, as were the COVID vaccines, for abuse and for corruption. Well, let's see. Steenhuisen has certainly got his hands full there as well. Well, a weaker dollar, we shouldn't really look at it as rand strength. Those countries whose currencies are really bouncing and going very strongly are benefiting on the one hand from the poorer dollar or the weaker dollar, but on the other hand from their own strong economic growth. That's not something we have here in South Africa, but who knows? Maybe we're moving in the right direction. Let's hope so. Well, now you have the edge. For the full interviews and the details behind these stories, head over to biznews.com. I'm Alec Hogg. Thank you for starting your morning with us. Now go and seize the day.